When people think about high-performing investments, the conversation usually revolves around stocks, real estate, or crypto. But behind the scenes, certain lesser-discussed asset classes have quietly outperformed traditional markets over long periods of time, while attracting far less public attention. These assets are often overlooked because they aren't as exciting, accessible, or heavily promoted as mainstream investments. Yet institutions and wealthy investors have been paying close attention to them for years. Today we will talk about the asset class quietly outperforming stocks nobody talks about. So, before we get started, make sure to hit that like button, also subscribe to my channel. 10. Most investors believe stocks are the ultimate wealth builder. For decades, stocks have dominated investing conversations. Financial media constantly talks about stock market indexes, technology companies, trading strategies, and portfolio growth. And historically, stocks have absolutely created enormous wealth for long-term investors. Because of this, many people assume the stock market is automatically the best performing asset class available over long periods. But what most ordinary investors never realize is that some of the world's wealthiest individuals quietly allocate large amounts of capital into completely different asset classes that receive far less public attention. These investments often grow quietly in the background, while most retail investors remain focused entirely on public markets. 9. The wealthiest investors often think beyond public markets. One major difference between ordinary investors and ultra-wealthy investors is access. Most people invest mainly in public assets like stocks, ETFs, and mutual funds, because those are the most visible and accessible options. But wealthy investors frequently diversify into private markets, alternative assets, land, infrastructure, farmland, and private equity opportunities. These investments often receive less media attention because they are less exciting publicly, less liquid, and harder for average investors to access directly. Yet over long periods, some of these assets quietly produced extraordinary returns. 8. Farmland quietly became one of the strongest long-term assets. One asset class many investors overlook is farmland. While technology stocks dominate headlines, farmland has quietly delivered strong long-term returns through a combination of land appreciation and agricultural income. Unlike many speculative assets, farmland produces something society always needs: food. As populations grow and usable agricultural land becomes more limited globally, productive farmland often becomes increasingly valuable over time. This combination of scarcity and necessity creates powerful long-term economic demand. 7. Farmland benefits from multiple layers of return. One reason farmland performs differently from many traditional investments is because returns often come from several directions simultaneously. The land itself may appreciate over time, while agricultural production can generate recurring income through leasing or crop operations. Inflation can also increase the value of agricultural products, which may further support land prices. This creates a structure where farmland potentially benefits from both income generation and long-term appreciation together. 6. The asset class is less emotionally volatile than stocks. Public stock markets move emotionally every day. Headlines, fear, recessions, political events, interest rates, and speculation constantly push prices higher or lower. Farmland and similar real assets often behave differently because they are less influenced by short-term investor sentiment. Productive land continues producing regardless of daily market panic. This lower emotional volatility can make certain alternative assets feel more stable during periods when stock markets become highly unpredictable. 5. Inflation often strengthens real assets. One reason real assets quietly outperform during certain periods is because inflation frequently supports their value. As the purchasing power of money declines, hard assets tied to physical resources often become more valuable. Land, commodities, infrastructure, and productive real estate may all benefit from inflationary environments because replacement costs and demand increase over time. Meanwhile, cash savings lose purchasing power quietly in the background. 4. The wealthy prioritize scarcity. One of the most important concepts in long-term investing is scarcity. Technology changes constantly. Companies rise and fall. Trends disappear. But certain physical assets remain permanently limited. There is only so much productive farmland, only so much desirable land, and only so many critical natural resources available globally. Wealthy investors often prioritize assets with long-term scarcity, because scarcity itself can support value growth over decades. 3. Alternative assets reduce dependence on traditional markets. Another major reason sophisticated investors diversify into overlooked asset classes is protection. Public markets can become extremely volatile during recessions, banking crises, or speculative bubbles. Alternative assets sometimes provide diversification because they are influenced by different economic forces. Farmland, infrastructure, royalties, and private assets may continue performing differently even during periods when stock markets struggle heavily. 2. Most ordinary investors ignore boring assets. One reason certain asset classes quietly outperform is because they are considered boring. Most retail investors chase excitement, rapid gains, and trendy investments. Slow-moving productive assets rarely attract the same attention as fast-rising technology stocks or speculative trades. But wealth is often built quietly through stable long-term ownership rather than constant excitement. Many boring assets compound steadily for decades, while public attention remains focused elsewhere. 1. The real secret. The best long-term assets often solve permanent human needs. The deeper truth about overlooked asset classes is not necessarily that stocks are bad investments. It is that some of the strongest long-term wealth builders are assets tied directly to permanent human necessities. Because the truth is simple, people will always need food, land, energy, infrastructure, and essential resources, regardless of economic cycles or market trends. And once you understand that wealthy investors often prioritize scarce productive assets capable of generating both income and long-term appreciation quietly over decades, you begin seeing why certain overlooked investments can sometimes outperform even popular stock markets, while receiving almost no public attention at all. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.